Yes. Did I just lose internet or something? Been having technical difficulties this morning, so give me just a second. Shows me live, huh? This morning, so. All right, everybody can hear me on Instagram. All right, I don't know. Guess it was just this computer. Oh well. Yes, man. What is going on? Happy Sunday morning. What you're looking at here on this chart is the S&P 500. And each one of these little bars you see right here, each one of those bars represents 1 month, man. This is 1 month. So that's 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, 7 months, 8 months, 9, 10, 11, 12. So a year ago, we're way up here. What's up, Michael, Carlos? So a year ago, the stock market in the world is up here. And today, we're right here. Now, we were right here. And the difference from here to here is pretty big. This is pretty big. And this is the average stock in the S&P 500. That's a pretty big move, right? And we all remember this one. Look how short it was. Time of terror, but it was pretty short. This time stuff is fractal, man. And you're given so much. And it's at the core of trading. Time is at the core of being an investor. The core of having any kind of philosophy built on to understand the concepts of assets or wealth, or, here where I'm assuming, there's some of that in your life. This is the stock market we're talking about. And if you look, from this to this is a beautiful thing, right? This is people that own assets are just getting richer and richer and richer and richer, and the price just goes higher and higher. I wrote this, I've been working on this. So this is the monthly. Let's back this up a little. And when you see it red, that means that month was down. And when you had a up month, a down month, a down month, a up month, a up month, a down month, a up month, up, down, right? And inside of that, if we get into a weekly, it starts to get a little more volatile. So the bigger our picture, as we step back and look and observe time, well, if you owned Exxon, November to November, you might have got paid $2,000-$3,000. There are people that collected millions of dollars from this time in history to this time in history, about 1 year of trading. And during that 1 year, they collected thousands and thousands and thousands of dollars in interest payments, dividend payments. All of that is going on inside of this while this has been going down, right? Meaning, and then if we take this from a weekly to a daily, now we're going to zoom in. So each one of these bars is 5 days. Well, that was a pretty good week. Look where it opened. Opened there on Monday, rose up, closed there on Friday. That's pretty positive. Price looks like it's going up. Because not too long ago, it was down here at 353. Now, 1 week, 2 week, 3 week, 4 week. What'd you do that month? So during that month, listen, you're a trader, right? People want to trade. Well, for an entire month, it went up. So as we keep taking time in, I hope as we get there, this expands and it becomes what I believe is a pattern that you can see that the way price moves and that it's fractal. We could back it up. We could back it up, back it up. But inside of that movement of price, the way it moves, this is how we record stock movements, commodities, oils. Now I'm going to show you something today. I'm going to give you something you might not know, the difference between the S&P 500 and say like oil or a commodity like coffee. Right now I'm long natural gas. That's a trade. It's a commodity, meaning we can't just sit on this shit our whole life. That's not how commodities work. That is how the stock market works. Now, there's a lot of people who tell you that's not true. But if you back this up, man, all the way to a monthly, if we go to the last 10 years, man, of this price, it's pretty much just up, dude. And every so often, it goes on a little trip, goes on a little adventure, purges everyone, and then it turns and heads up. And this is why you have guys like Warren Buffett that are so damn rich, is they believe this, man. And they believe that that the general consensus, the wind is there's more people, more money, more people need to invest, there's more ideas, technology, companies merge and grow, and if they can pick the right ones, and they don't have to get them all right, they just need to build out a possible list of some, that the general wave, that stocks will generally go the direction of the S&P 500. That's one of the core tenets of my belief in the stock market, is that's why indexing works. Yeah, no shit, because that's the wind. So we all should play that game, meaning at the heart of your investing is the fact that the S&P 500 goes up over time. If it doesn't, this is a really dumb thing to do probably. And if we back it up to a weekly, most of the time it's going up. And if we know that, and we know that from time to time, what do I say here? Page 30. Listen to this for just a second. So I'm going to give you something today, the difference between a commodity and the S&P 500 and stocks. And there is a difference, man. I say on page 30, before we go any further, please, if you will think to yourself, how many times have you sold a stock that later continued to go much higher? Let's look at an example. I don't know. Let's just look at Ford. Look at this. Look at this chaotic shit called Ford. Let me show you something on Ford. About 7 years ago, I wrote this down because I would see this pattern all the time. I'm not saying that pattern is going to do this or that. I'm just saying I would see the pattern developing. And as I would watch it, I knew there were some common things, man, that when price was on this side of the green line versus price breaking down on this side of the green line. And from that, like a little kid with a crayon, I could construct this price pattern, this fractal pattern that price would move. And as I used trend lines and anchor points and apexes and stages, 1, 2, 3, 4, as I began to draw that out, it would be, and I would look at these 7 things called indicators. I sent out this video yesterday in my email, and it's just a buffer, man, a little teaser about indicators. Moving average is just an indicator. These are all lagging, by the way, meaning, what do you mean? Meaning past performance. Everything is the past. Every piece of information we get to predict the future comes from the past, man. And so what I'm looking for is a fractal pattern of price. And depending on the thing that I'm trading, whether it be shoes, houses, land, or stocks, they all have a different way of valuing them. And once you understand how the thing you're trading is valued, or when it's considered overvalued or undervalued, right? Or what's considered a trend or not a trend. Once you can look at price, you can kind of make a determination of where it's at right now. And that's it. That's all I'm trying to do, man. I say on page 30, before we go any further, please, if you will think to yourself, how many times have you sold a stock that later to continue to go much higher? It's probably a long list. Truth is, as humans, we do not see things with our eyes. We see things with our brains. So in fact, what you can see will always fool you. We try to use logic and we try to make sense of everything. And in some places in life that may serve you well. In the stock market, it can backfire on you. Yet stocks do not move day to day based on logic or common sense. They move based on fear and greed. Emotions move stocks, overreactions. Successful traders know this and react accordingly. This takes training. You must train yourself to trust the process even when it doesn't seem to make logical sense at times. Or our mind Or your mind responds with fear, and yet the charts show a breakout. Here's a good one. When I began to buy the March 2020 bottom, documented, the common response was, it's a dead cat bounce. Maybe, but for me, it was a stage 2 breakout. See, I cannot know the future. I know for 100% no one else does either. So any hard or fast opinions I know are just guesses. Now I'd say fucking guesses. 9:53, cursing. I decided to give up on price prediction and focus on positioning myself on what is and not what might be. Money is everywhere, except if you do not train your mind to see it and to accept more income, your eyes will fool you. That is how the poor remain poor. They see the world as they are, not as the world is, abundant. So as we come to the market every day, it's so abundant, so beautiful. So many things are setting up right now. So many things. Look at this. Remember what were you thinking about on October 10th? I know that was a special day for you. If I asked anyone on here, you remember October 10th? Tell me all about it. What'd you have for lunch? Anybody know? I mean, honestly. Think about that for a second. What were you doing that day? I mean, what was going on? Did you know that Ford was bottoming? Seriously. No jokes, no bullshit. Did you see that? Did you see that day, the candle that was the lowest low, and then the next day it wasn't? And you're like, wow, I have this belief on price. And if I was to lay this over 50, 60 things, and you're like, 50, 60 things? Yeah, man, maybe 200 of them. Maybe lay it over that. And as I watch it, and I'm going to give you something, there's a distinction between a commodity and a stock. See, stocks, we believe, grow in value. If the company keeps producing, it makes a product or a service. This is key. They have to be able to create the product or service and market it and take it to the marketplace, okay? That's crucial in investing. And inside of that are cycles, and some businesses get big enough that they have reserves and they can borrow money and they produce enough and they make enough, they're going to ride through the cycles. And then sometimes they don't make it. Black swan events, things happen, and there's, some people don't make it, and there's purges and there's mergers. All that shit is going on inside of price, inside this time, this fractal piece of time. And you're playing. So on October 10th, I don't know what you were doing. I know it was some special day. There was a lot going on and really couldn't keep your eye. I mean, could you? Were you? Did you see this? This is what the money flow, what I call the money flow, just the religion of the money. That's why I do it on Sunday and call it Sunday service. For me, it's like that. I have to see that. I want to see that on everything I follow. I need to see this. And that is a moment of chaos. My new book is called Chaos to Cash, because when these indicators cross, when time stops and merges, it's a force. See, price wants to move the easiest way possible. What it was doing yesterday, it tends to just keep doing. We call that a trend. And it keeps doing it and keeps doing it and keeps doing it. And it's the easiest way to go is that direction. And one day it starts and then it just keeps going. And then one day it stops. And that's the easiest way to describe the movement of price. And to know, it's like, I don't know, but I know there's patterns. And that's all I'm trading is that pattern based on what I believe the value of something is. And the shorter my time frame in the money flow, and you go, what do you mean? Well, maybe I'm trading down here, man. You're like, gee, I got to go a little faster, man. My mama put me on Ritalin early in life. I need to move a little bit faster. I'm like, cool. We'll look for the pattern on the 1 hour. You're like, what do you mean, man? You said, my mama put me on Ritalin at 9. I got to go faster. Take me down. And we see if we can start finding that pattern inside of a lower time frame. How low do you want to go, baby? That's up to you, man. Most of the shit that I trade in, it ain't going to zero. I ain't worried about that. I mean, I ain't worried about Ford going to zero, guys. I'm worried about I don't get enough Ford before it goes to 25 or 30. You get what I'm saying? My concern is that my position sizes aren't big enough, spread out in enough things. I don't have enough exposure to enough things so that I can get rich. That's my concern, right? And so I'm watching this pattern and I'm trying to think, okay, how do I best apply this, especially if I'm trading? Meaning, if I'm trading, I don't want to buy when the pattern's up here, right? And maybe you're trading something like the S&P, and the S&P, is going, it's either in an uptrend or in a downtrend, right? It's pretty easy to determine once we have some way of determining it. And then we're only looking at the past because that's all we can look at. And then it's like, okay, and I assume it just goes through that flow, man, of stopping, sideways, breakout, run up, stopping, sideways, breakdown, run down. And that's what I'm watching. And this is probably a bad example for it on a 1 hour, but the S&P would look a little tighter. I don't know that anybody's trading Ford on a 1 hour chart. You might be. Maybe you are, man. Maybe you are. Let's look at oil for a second. When I began to buy the March 2020 bottom, the common response was it's a dead cat bounce. Maybe it was. It's based on fear. But for me, it was a stage 1 followed by a stage 2 breakout. See, I cannot know the future, but I know 100% no one else can either. So in any hard or fast opinions, I know are just guesses. And I know that the best buys often come at the lowest low of the very awful of the bottom. And the scariest point is when the person with the most courage to execute and with discipline their trading system. I decided to give up on price prediction and focus on positioning myself on what is and what will be and not what might be. I need to go back. I just ad-lib a part of that. Money is everywhere, except if you do not train your mind to see it and accept more income, your eyes will fool you. That is how the poor remain poor. They see the world as they are, not as the world is abundant. So let me back this up for a second. Let me give you an example on what I'm talking about there. Well, I'm getting off track. Let me stay on this oil thing. Let's look at the price of oil for just a second. Let me back this up. That's a daily. Let's go to weekly. Let's go to monthly. All right. This is a monthly chart of the continuous chart for oil, okay, the futures thing. And if we find the highest high, come down here in these lows, and we saw it break. I'm just catching where it's turning here for just to see what we're looking at. Now, I did a bunch more lines than I wanted to there, but what I'm trying to get you to see is it's been as high as 130. It's been as low as 0, right? It's been as high as 130, low as fucking like 20. Then over here. So, what are you seeing? And a better way to draw that maybe would be, let's try this. It's down, up, over, down, over, up, over, down, over, up, over, down. I don't know where you ever seen that before. Come on, man. They're going to put me in jail. What are we seeing now? So, the difference between oil, this is a commodity, and say the S&P 500, this PY, is super important. If you get this, it's going to help you on a lot of stocks, a lot of things. And if you look at the S&P on a monthly, what you see is it goes up where a commodity is trapped in a band or a range. Now, the range can expand over time, but it's not in a continual state of value creation. Meaning this is the commodity itself, and from the commodity they extrapolate it and they take it there's industry around it. Like for oil, there'd be oil stocks, there'd be ETNs, there'd be some shipping stocks. Like there's all kinds of stocks that trade around this commodity itself, right? But the stock creates value. It builds equity. It gives you dividends. It's a money creation machine. This is just the commodity. So if we're looking at Exxon and we put that on a monthly chart, right? It tends to go the direction of the S&P, meaning it's creating value, it's creating equity, but it's directly connected to a commodity that's trapped inside a band, a price range. The commodity's not going to 1,000. It's going to be in a certain, because they have the ability to turn the pumps on and just start down. That's how that works, man. So it's and I don't want to say it can't go higher because it can obviously go higher, but it's trapped in meaning Starbucks, you buying barrels of coffee is not creating equity for you. You owning Starbucks and buying coffee creates equity for you. And so the stock itself, if you put $10,000 in coffee and just sit on it versus you put $10,000 in Starbucks and sit on it, the wealth creation, the equity growth is enormous, right? But if you just put money in the S&P, it actually does grow, meaning the difference between a stock and an equity or a commodity. So if we watch that, if we know this, then the game for those is if I'm looking for value, I'm just looking for big down moves. And what? I'm just trying to catch up moves. If I'm trading, meaning I don't give a fuck where coffee goes, up, down. I don't own I do own Starbucks, meaning my investments in Starbucks need to worry about where coffee is, right? But as a trader, if I'm watching this is the thing about the money flow. I hope you have my book, man. Man, get the book, man, if you ain't got the book. Come on. Money is everywhere, except if you do not train your mind to see it and accept more income, your eyes will fool you. This is how the poor remain poor. They see the world as they are, not as the world is, abundant. Money is just made up. That's the crazy thing about it. We all need it, and shit's just made up. Like, oh, look, there's some coffee. Let's just make up this price. This price is completely made up. So on tomorrow morning, this shit's going to open, and probably tonight at 5 since it trades on the futures exchange. And this here's the ticker JO. JO is an ETN. Guess what? That's not an ETF. That's not your mama's mutual fund. It's not a mutual fund. It's not, okay? And it's not an ETF, which stands for electronically traded fund. This is an ETN, which stands for electronically traded note. And the note trades around the price movement of the futures contract of coffee. And coffee has contract months. How's that for complicated? But we don't have to do it. We can simplify it. And that's why there's a little fee on this, is they're going to do that for you. And this is just trading the price of coffee. And if you came over here and you put in $COFFEE, we're going to get the continuous coffee contract. Now look at this. Coffee's come way down. Look at that. Coffee's come way down. Hold on, man. Writing love letters to myself. So coffee's come way down. My new ebook talks a lot about this yellow line here. It's the 200-day moving average. It's even more important than things like gold and oil. It's just a flashing indicator, so to speak. It isn't the arbiter of truth, but a lot of times it's right. It's a very quick way to make a decision. In real estate, we call this the 1% rule. There's the 60-40 rule. There's this rule, there's that rule. These are ways to quickly analyze a property. Meaning, if you show me the numbers, I can tell you right if it's a good deal or a bad deal just from the fucking numbers. I don't even need to look at it. There's no point in looking at a deal that doesn't meet the numbers. And if you're like, well, at that point I want to see it, and it's like, cool, but you're not, okay, let's go look. And then you go look, and then now we get more numbers, right? Well, guess what? Money's everywhere, except if you do not train your mind to see it. How are you going to know there's a coffee trade if you ain't looking? Accept more income, and accept more income, your eyes will fool you. You don't have $1.65? So what the markets are today, this is the crazy thing, dude. When I was in my 20s and 30s, this was a real hassle. You had to write a check, fill out these forms on fucking paper, mail it in, mail it. 5 days later, they get it. They open your account. And then 4 days later, the money shows up. And then you're like, oh, okay. And you got a book. And I ordered a book from the back of a newspaper. It was this guy when I first started looking at trading. And I forget his ridiculous scheme for trading. And then I would call the orders in on the phone. All you got to do is click your thumbs. Think of that. That's it. Want to be an oil trader? It's a 14-year-old girl with thumbs in her bedroom. That's all it takes. There are zero qualifications. No one knows. You put it, it's better than a casino. Kids can't go in casinos. Kids can do this. A lot of them. Go look on TikTok. All kind of stock kids. I meet kids all the time, 19 years old, $100,000 in the stock market, and their parents don't have shit. How's that possible? Well, money is everywhere, except if you do not train your mind to see it and accept more income, your eyes will fool you. This is how the poor remain poor. They see the world as they are, not as the world is, abundant. What the money people will do is they train themselves to see money as separate from their own labor. That is why they get other people to work for them. And so they earn off the energy of other people. So simple, yet most people can't see that far. Average person earns off of 40 to 50 hours of their time each week. The rich people have 10,000-hour work weeks. They leverage themselves into other people's time, talent, and energy. That is what trading and investing with the money flow is all about. Leveraging yourself into other people's businesses. Bet you never heard that before. That was a bomb. Bam. I'd subscribe myself. All right, I just subscribed to myself on YouTube. Let's see. So that yellow line is like the 1% rule in real estate. You're like, what do you mean? Well, if it's a $100,000 property, can I rent it for $1,000? If that number hits, you do that deal immediately. Here, I'll do the deal. I don't even need to see it. Lock it in. We'll get out of the deal later. But if a property costs $200,000 and you think you could rent it for $2,000, that's like getting dealt an 11 at the blackjack table and the dealer has a 5. There is no other option than double down if you're there to win. But see, to be there to win, you got to accept that there's money everywhere and you have to train your mind to see it. So in order to make money in oil, you got to be thinking about making money in oil. Then you got to figure out how you're going to do that. That's what this is, man, for me. So when I watch these prices moving up and down, shit, I don't even need money in them to understand them. You're like, what do you mean? There's people like, well, I don't like Bitcoin. What does that got to do with watching the price, man? So here's the price of Bitcoin. A lot of people have opinions on Bitcoin. They don't know the price is here. It's in a stage 1. They don't know that. Think how much more you know about Bitcoin than other people just right now. I don't even need to know what the fuck this is. So if I'm watching this price and I'm looking at it, I'm like, well, it came down and then it stopped. So we know where the bottom is, right there. Well, what's it doing now? It looks like it's going up, right? I don't have to be too bright to see that. Then I see my TSI. I don't do classes on the TSI anymore because it's actually actual Illuminati information that I'm literally legally not allowed to talk to people about. So it's only in my book. And since I don't want to be sued by the Illuminati, I'm going to let you read on that. I do talk a lot about the histogram, right? And the stochastics breakout. But these things line up in stage ones right as price is about to turn, man. You'll start to see that. So if you're in the money flow gang, I sent a text out yesterday, buying a little crypto. Now you might be like, oh, but the crypto market, they're all, it's like, I know. I don't need to know all that, man. It looks like it's about to rip. And if I was a trading man, which I am a trading man, it looks like it's been here a bunch of times. Been there a bunch of times. We could easily get back to there. And that would be this. Are you still with me, man? Are you still with me? So when I began to buy the March 2020 bottom, the common response was, it's a dead cat bounce. I used to go live and I'd have all these, they're buying a dead cat bounce. All right, dude. I'm actually buying the bottom here. Like, but if it's not good, I'll buy the next one. So as a trader, I might see this as an opportunity to trade. I got a bottom to trade against. If it comes there, I could get out. Now I'm trading, right? Here's my risk. This little zone in here. Let's clean this up, man. All right, listen up, kids. We have a low that's held, right? This is the same for a stock. So we're just using this chart. And if I don't tell you what this is, let's say I tell you, man, this thing's worth about 30,000. It's worth 35. It's worth 25,000. What if this is a house? What if this is a neighborhood? And I'm like, well, the houses cost $165,554. I mean, I did this just the other day. I put it on my story. These neighborhood buys, they're going for 260. I remember when over there was like 110. But look, so we're at, and if I don't tell you what this is, but the moment I tell you what this is, all of a sudden we're like, oh, like we have opinions now, right? All of a sudden that, and sometimes that's good. Sometimes that's not good, right? I don't know how well conditioned you are. I don't know how your mind is open into receiving. And a lot of people say, well, I would buy the bottom, except the bottom looks pretty bad, dude. It's not fucking obvious, by the way. Buying lows and stuff, like being greedy when other people are fearful, that's easy to say, not easy to do. I know, because I don't know many people that do it on a consistent basis. I know some in the money flow gang, but I mean, outside of people I trade with, I don't know many people doing that. So we got this sideways movement on Bitcoin. What could we do? We know the money flow is fractal. We could drop it down to an hourly chart. See what we see. Wow, it's a pretty tight pattern, huh? And this is what I'm waiting for, right? Big breakout. Now, I'm just talking price here, technical analysis. That was our move. And then we're breaking down open here, right? Anyway, man. So on coffee, what I'm looking for, a reversion to the mean. May not happen. Maybe this gets revised. Maybe I get stopped out here. Or maybe, like a lot of times when price does, it pulls down, pulls back, pulls down, pulls back, right? And it's running through this pattern here. It goes down, stops, starts to go sideways, drifts up, breaks out, runs up, stops, starts to go sideways. And inside of that, in this larger fractal pattern of price moving, man. I'm sorry, I was reading this. People who make, I wrote this a while back, so it's when you read your own stuff. People who make the most money realize that a working day evaporates as time goes by. So by 6 p.m., let's say, people start to get sluggish, and by 7, they are done. Not the rich. So when we say that time evaporates, we mean there's not enough hours in a day or even in months for people to become rich. So what the money people do is they leverage things such as manufacturing machines, technology, and other people, and they multiply themselves by earning off hundreds or thousands of hours a week, which give them unlimited time earning potentials. You gotta like that. We'll see on this coffee trade. We just started building it. This is it on the this golden line up here in technical analysis. On Wall Street, there's people who call themselves fundamental analysis or home gamers. Doesn't have to be on Wall Street. And then there's technical analysis. Technical analysis is looking at charts, basically. And most of the charts you probably see are in black. People got candlesticks, all right? I'm a little old-fashioned. I like the white because it looks brighter, cleaner. It's easier on my eyes. I use bars because, again, same reason. I can see black means money, red means it's going down. And where I'm looking for is in relation to these other indicators. So whenever I look at price, I'm like, okay, where's price? And you're like, and so this is what I'm looking at. So remember, I said the 1% rule. If you were to show me a rental, hey, Gerald, what do you think of this deal on this rental house? Give me the numbers. Based on the numbers, I can see is how close is it to the 1% rule. Well, if I'm looking at stocks, and now you say, what do you think of this stock? First thing I do is I look, this is in my head, right? This is in my head with all of these indicators. And I know what they're going to look like in any situation, stage 1, 2, 3, 4, what they're going to look like. So first thing I'm going to do is whatever you show me, I'm going to look at it. I'm going to go, whoa, that is a hell of a stage 4 decline. And what I need to know is why. So if I look at a stock, why did this happen? Why is this house for sale? Is it a foreclosure? That's different than a short sale. That's different than the guy died and his family's selling it, okay? Meaning, based on why they're selling it, could give me valuable information in this ongoing feedback loop of price. Price is just a made-up agreement between two people, man. You think it means something. Nobody else gives a fuck. As history goes on, nobody cares what you paid for a property. I remember in 2011 and 12, I was buying houses, and everybody would say to me, man, you see what that dude paid in 2008? I'm not paying him that, and he paid that. And I'm like, what he paid ain't got nothing to do with you, man. What do you think it's worth? Don't worry about what he paid for it. What does that matter? I mean, what the fuck? I don't give so if I come in here and I'm buying a coffee contract, I don't give a shit if you bought it at 155 or if you bought it at 200. Now you want to sell it to me. It don't have anything to do with me. I'm trading this. Now, the only reason it might help me if I knew you were in a bad spot, and my job is to drive a bargain, maybe that information helps. And that's probably why people are selling it. They bought it up here, now it's down here, they're getting stopped out, right? Same with houses. Right now, interest rates are going up, means people, which they often do. I talk about this in my free ebook. I tell people, whatever you do, do not go buy a baller house. That is a fucking worst thing you could do. Don't get out there and jump off your 4-bedroom, 2-bath, big-ass forever home. You're 26 years old. Enjoy being broke the rest of your life. Just the maintenance costs on your own place is going to eat you, man. So you want to wait on that, man. I don't want to have 2, 3 houses for myself until I got money. In the beginning, I need to get my money into these games here, these money games. Maybe you need to pay attention to coffee, man. Maybe God called you to, maybe you'll be the greatest coffee trader in history. Maybe you can go read the fundamentals and for some weird reason, it makes sense to you. Well, how would you know that if you never did it, man? How do we know what we're good at doing? I don't know if I'm good at playing bingo until I play bingo, right? Or play cards till I play cards. And if there's money flowing around, what I found in the stock market and the public markets, price move pretty predictable because it's just human beings, man. Every day people get up, the same fucking people as yesterday. Some days there's new people and some days people get blown out. But some people are there every day. Hedge funds don't quit. Like they don't go, oh, baby, you think I can trade the market this week like you do? They do. Every day they get up. There's billionaires that wake up, turn on their fucking computer. They're not getting in a cold tank or jogging or meditating. Bullshit I see. They got billions of dollars in the market. So they get up, turn their computers on, grab their phone, grab some coffee, start flipping through Barron's, like trying to make some money, man. I see some crazy advice. Watch this. This fund right here, USA, is a closed-end fund. Pays 12% dividend. It's leveraged. A little bit of leverage in there. Got some pros running it. They got a public portfolio. You can go look at it. And I want you to think about this over the next couple years. If we can pick these, that one got us. And if you stay with this pattern, this thing pays 10%, guys, 10%. And you're going to see it flow down, over. How much did I tell you it pays? Well, it's actually 12% now. Meaning when it goes lower, when it's down into here, it pays a higher yield than if you bought it up here. If you buy it up here, they're going to pay you that dividend. And right here, it's $6.80. I've owned it higher than that. But just a couple months before, it got down to $5.70. And was there some way that I could like, man, maybe I could tag those, if not the exact bottom, like really close? I would be like, yes, you can. Look, RSI went extreme. We got an anchor point. We got 4 days. It was above the 5-day, right out of my book. You're buying that. If it fits in your world, money's all around you. People are like, how do you get passive income? It's like, it's everywhere. Now, what they'll tell people is, well, the only wise way to do it is to go to your 401k director and talk to Bob or whichever employee happens to be there and speak with them about your financial future. And it's like, Bob doesn't know shit. Bob's not trading these markets every day. He doesn't know what these things are. That's been farmed off to someone else, to someone else, to someone else, man. And we hope they're doing it right. We hope, man. I don't know. I saw a teachers union had $100 million invested in FTX. They were fucking living in a commune. And chick has elf ears. Nobody noticed the elf ears? Nobody noticed the Harry Potter dress-up nights? So no institutional investors noticed that. They got $100 million. You couldn't send over one person to spend 3 days with these idiots? You're going to tell me if they spent 3 days with these people, they would have come back and be like, yeah, I think we should give that little crazy girl. Have you ever watched the video of this girl? They were like, well, what about stop losses? We don't use them. You don't use them. Nope, don't use them. What about math? Do you use math? Nope, we don't use complicated math. But you went to MIT. Yeah, isn't that funny? Like, have you seen this interview? And it's like, they gave them billions. So when I write in my book, where's it at? Where's it at? Where'd I put it? Money is everywhere. Oh, man, it must be. They just gave these people billions. So money is everywhere, man. All you got to do is ask for it. You can wear elf ears. And if you're talking like you could have wore elf ears, you could have lived in a fucking commune. And if some of you got some of your friends that know how to program, you guys could have put that together. This is how much money's in the world, man. And they'll just hand it to you. Now what if you get up and you went out and you wanted to buy some of these things? So this thing here pays like 12%. Think of that. What if I got like 100 G's in here? Man, that's like $1,000 a month. Would you like $1,000 a month? You're like, but I don't know. How would I get 100? I don't know. Over a few years, buy a bunch of stage ones. That's what I'm doing. It's what I've done on all my positions. It's how I got 100 in oil. I would just watch Exxon. I watch the commodity. I know when it goes into a stage 4 decline. And I know when it looks the absolute worst, stupidest, terrible idea, probably the best time. I know that everyone on earth knows nothing. They are all full of shit. They have no idea where price is going, including you. You have no idea, and neither do I. But I do understand value in equity and interest and dividends and history. And I can fucking see with my own eyes. And so I can go back and look. Always, like, I go back and I type in the SPY, and I'm like, wow, that looks pretty volatile. Yeah, what you're seeing here is the money flow. This is the money flow inside of the S&P 500, which over time just goes up, right? It did for your grandfather's life. It did for your dad's life. Go back and look. Look when your dad was born and look when he died. It's higher. Go back and look when your great-grandfather was born and then when he died, it's higher. It's higher. It's been higher. It's always higher. It's going higher. Housing prices, higher. Gas prices, higher. Price for coffee, the commodity may go down, which means Starbucks will make money. You're not getting a discount. It's going fucking higher. You get that? So oil can go up and down. The commodity, oil companies, stocks are going higher. Meaning if you own them, maybe the share value is going up and down, but the share count is always growing. Because if you own fucking Exxon, they give you fucking Exxon. Every month, whether you come to work or not, you could have been a very, very bad boy or girl. You could have done cocaine all fucking the last 90 days, snorting it, and they're going to hand you money. You could be sitting in prison. They're going to be like, oh, give this dude his dividend. Here's your dividend. You did nothing. And that money is unlimited. That money is filled in the world. Unlimited. Dividends are unfucking limited. They give you $1 billion and nobody would even notice. It's unlimited. But but I don't know. You got to know about it. So that's my mission in life, is to point that to people. So this is one we've been accumulating. Why? They're under the 200 day. So if we back up. Oh, wait. If you look at this, this is a weekly chart on the USA fund, right? This is an equity fund, pays out dividends. It's been going down, right? It was going up, and it went down. It's pretty weird how this works. And now we're going down. So these points, I'm trying to tag the bottom on this. And I think over time, it'll keep going higher, following the SPY. So if you look at the S&P, the general chart pattern is the same. It's the S&P 500 on a weekly. As this goes, everything goes. As this goes, everything goes. As a general rule. As this goes, everything goes. As oil goes, oil stocks go. Right? And inside of that, price moves too far, too fast. It goes too high, does it too much, takes off. And it's like, oh, wait, we're way ahead of ourselves here. Turns around, comes back. And that movement of price is what we're trying to do here. So I believe wholeheartedly, which makes it even more great right now. And you're like, what do you mean? Look, dude, this is where the S&P was. Okay? We're at a moment in history where it is below that. You could not say that here if you got in down here. And you go, what do you mean? If you bought in here the very first time you got on the train and it went to here, you have nothing to look forward to but it coming down. Right? That's the way price moves. That's the pattern. It'll run up, and it does it in real estate. They build, they build, they build, they build, they build, they build, they build. They keep fucking building. There's nobody to buy up these houses or to rent them. And it's like, fuck, you overbuilt it. Now we have a recession. Shit stops, slows down. And eventually over time, it's eaten or it's run down or businesses move in, it stops at a certain point. It'll pull back. In beach condos, they can run up and get stupid, and watches and art and NFTs, and it'll just go stupid, and then it'll stop. And it doesn't go straight down or straight up. It moves in these patterns. And as we watch it, here's the thing, though. Some things come and go, right? There was a tickly bear in '92 that was a hot thing. That comes and goes. Some things never stop playing. And the thing that's traded the most in the world is the S&P 500, man. This is one of the top things that's traded in the world. And inside of this, what we know, we can leverage this. What day was that? Let me see if I did. Let me pull this up on my end. Let's see. All right. See what it says there? 1011 adding to UPRO. Now UPRO is a triple leveraged S&P 500 fund. 1011. I don't know, man. I write it down. It is where it is, okay? Some shit I get wrong, but I'm trading the money flow. Damn, right there. And at that time, I'm guessing we're playing off this being the pivot point. And now we've run. So if we're talking the UPRO, it's a triple leverage fund. Let's see, UPRO. You're like, you can't know that's the bottom. Yeah, no shit. I know that. So we got about $10 there. 29 to 38, probably going to tag $20. Or we're going to tag the 39, I'm sure. So, but that's all that is. This is a fractal pattern that I believe that over time, whether it be trading, so I mean as a trader, I can take this down when it hits previous high, which is probably, I don't know, we're probably doing it right around in there, I'm guessing. We're probably right up on it now, getting close to the first target. So if I'm trading this in a trading account, I'm watching the S&P, I'm in tune with it, but I'm also watching it because I have investments. And investments, I just want to take advantage of the ups and downs. And if I can systematize it, I don't need to put a lot of thought into it. You might be like, well, I like this company better than that company. It's like, all right, I got 117 of them. Some are going to do better than others. But if I watch, I can weight my money, right? I can weight my money in the ones with the better returns. I can trim some that have run up. But outside of that, so that's wealth talk, right? And that doesn't even have to get perfect. You don't have to get that shit perfect. If you're doing it consistently over time, investing in quality businesses. We talk about the dogs of the Dow because it's such an easy, documented, 100-plus-year-old strategy to get you started in the stock market. It's not the be-all, end-all, but it is a solid base. I have a lot of money in it. It just works over time. It's not perfect, but then if you overlay the money flow and you overlay your own research, it gets better. But as a trader, as I watch that, and I'm watching this, and if I have some money and I want to use options or margin, I want to make some money trading, if I'm in tune with the S&P and I'm seeing these patterns, I can not only add in my, I need to add my buy and hold here. Could be the last bottom. Maybe this is the lowest it ever goes, man. Maybe the next 3 years is up. And the guy may say, oh, no, it'll go down. You don't fucking know that, dude. Stop. You actually do not know that. You might be betting on that. I mean, I hope it does. Why? I need more of these because I know I'm going to buy them all, man. As long as I got money, I'm buying these. So I would have bought this one in my buy and hold. If I'm doing the S&P thing, I would have bought this one. I want to buy all of them, all the bottoms, all the way around. And if it goes around, then guess what? I'd be better than buying the tops. Duh. You want to buy tops and buy, like, after it's broke out, that's a terrible strategy. So if I'm just going forward and a guy may say to me, well, I just randomly put it in there. I'm like, okay, well, you do that. I'm not going to do that. I know how price moves. And very often it'll run up and then it stops and then it pulls back and then it goes in, right? There's people that don't know that. And they don't know that you don't, if you own different stocks, it doesn't have to be perfect. If I'm just as a pattern consistently banging those, and what if I do get 10, 12 of them perfect, which I do a lot, by the way? You don't think that starts to add? And that's something you can't do in an index fund. So if you have, Gilead was one we've been buying for years, 2 years. So I put a video out on, I sent an email yesterday. I said, listen, I'm not going to put any books on sale, you greedy bastards. This is the price. What I'm going to do is give you 2 videos to watch. One is on vertical and horizontal time. Really try to understand that. This here was a horizontal time game, meaning as this started 2 years ago, and that video was from 2 years ago, I sent in the email, and it was on this, okay? This is proof. That's what I'm giving you for Thanksgiving. Fucking proof. That's what I'm giving you. And so this was a stock that was undervalued. It was in the 50s. That should have been in the 80s, according to Morningstar. I've done a lot of these where the company gets bought out for the exact price that Morningstar had, the exact price. That's where it gets taken public or private. So Gilead is trading at a fair range. Yeah, no shit. We knew that 2 years ago. So when I started buying it with $1,000, I put $1,000 into Gilead. Now look at this. I know a guy that wrote a book years ago, and it said price moves in 4 stages. Look at this. I mean, come on, man. Come on, man. That is this. Look at it. Either that or I'm a crazy person. And so as I watch this, I would let it come in, go in your stage ones. You're like, well, and look, this is the worst time to buy. All the news is shitty. Buying some, buy some, just keep buying some, right? And then what? The value we thought would happen. How do you know it was going to happen? I don't know what's going to happen. This is based on value, fundamental value. There are people called stock analysts who analyze stocks based on their sales, their flow, things they're working on. You know, is this a growth company? And this company pays a 5.5% dividend yield to play this game of building stage ones to wait for Gilead to finally hit true value, which it just did. So if you go back and watch that video, at the time there in the video, I got $3,000 of it. Well, today it's like $12,000. Is that a fortune? No, but guess what? Now that was a deal, a small deal that I did now that's 12 or 13,000, probably 13, 14 now. And that was just buying a few shares. Now remember, this is a weekly, so this is 2.5 years of playing that game with this stock. So now if I own it, my buy and hold, what? I'm going to trim it, which is what I did, and I'm starting a new position in a new stock that's undervalued, technically is probably on a stage one, that Morningstar says is 30, 40% cheaper, right? And that money goes into that. Now that's an asset. It was created from an asset. Money I had invested in this company that paid a dividend over the last 2 years when it would go down, go into stage ones, I would watch it. I would come in and you'd get a text from me, I'm buying Gilead. And then a year later, you're like, fuck, dude, we're underwater in this. I know, we're buying Gilead. And then at one point, we're underwater like 22%. I know, buying Gilead, stage one. And then what? Now it's up like 40%. So it went from being down 20. So all the down did was let you learn the money flow and allocate money to it. That's all it did. That was the benefit to you. That was God going, here, let me help you. So that's how we have to see this, man. That's why I said it's like church, man. I got to make this as holy as I can as I explain to people because they don't fucking understand what has been given to them and they don't respect it. This, man, can turn into so much money. It can turn into millions of dollars for you. Especially you guys that make money. My God. I mean, they're all over the place. These stocks, it's not complicated. You can, I subscribe to Barron's, Morningstar, Sure Dividend Newsletter, a few others. That dude's a friend of mine. Morningstar, and these all it does is keep you in the loop on these things, man. As far as sectors, and what I'm looking for is like which sector offers the best opportunity. They usually look the worst, and so I'm looking to take gains, holding a core position and roll it to the other one. And it may sound simple, and it's like, okay, but what day exactly are you going to do that? See, and that's what the money flow allows is Tuesday at 11. Like that's when we did that, Tuesday at 11. You get what I'm saying? So that's what this is. So as I track my trades, it's like on purpose. What you think about comes about. What you focus on grows. And as you focus on it, day after day, watching it, look there, I'm being greedy. I'm writing it down. I'm greedy. What does that mean? It means I'm not taking off on the first target. That's what that means. Trading log. Our natural gas trade is underway. This was 11:23. Many in the MFG took some profits at the open. I'm being a little greedy. Keep an eye on Joe. It's starting to form a nice stage one, adding to possible breakout move underway in Tesla, adding to Amazon and Cisco. Cisco could be trimmed here. Have oil stocks tapped out? Feels like it's forming a stage 3. We will see. I'm in a half position in ERX. So this is me to you, man. It's because I love you, man. See what I'm saying? You writing that up for your friends? Hey, bro, here's what's going on in the stock market. Try that. They don't give a fuck. Most people could care less. They don't care. They don't know where Gilead is. They don't know where Merck is. Nobody knows. Everybody's like bitching about what's funny. Everybody's like all the fact, don't want to say the words, but all the stuff they made us put in our body, right? Man, instead of sitting around bitching about that, I know people that did that, like, oh, they're just bitching about it. It's like, bro, you know what you should do? You should just buy stage ones. That's what you should do. Just buy stage ones of these. This is Pfizer. Pfizer pays a big fat dividend. But let's say even if you didn't want to do that, you could trade them, right? So the money flow says where price has been before. This is a dividend stock. So this is right out of chaos to cash. It pays 4.5% dividend. You set up on a stage one. There's your buy zone. There's the 200 target. There's a gift. A lot of people complain about these companies, talk about them, but go get some money from them right here. But you want to talk about them, follow them every day. Make some money trading these things, man. They're going to keep going whether you like them or not. Let me let you in on that. You're like, well, I morally don't want to make money off Merck. I do. Give me your money. So if we want to put money in here, anytime this goes below this yellow line, you have my devout attention because that's a serious value line. It doesn't happen often. When you get a good stock, this could be 3 years before this ever comes below this line. This is how fucking sacred that is. So when you get a stock, because good ones don't do it, man. And once they get above it and start running, they don't look back. And they just keep going and ground and pounding, making you money. So we bought this one way back in the Dewey Do. Remember when this was a dog of the Dow? Let's take this back, man. Look, back in here. So this game just keeps playing, man. Back in here, $70. Look, it never looked back, man. How do you pick stocks? I don't know. Turn the TV on, open your eyes. So right now we're seeing it with what? Amazon is one. I mean, there's a whole list of them, but Amazon is one. Man, look how far this come down. It's underneath that 200-day right there. It's not a dividend stock, but you better listen up. It's one of the largest, most valuable companies in America. You even notice? Any of your friends notice? I bet your uncle didn't notice. Your dad call you? Hey, man, I think Amazon's setting up. Nope, you'd have to get that for some crazy person on the internet like me. But look at this. Man, oh, man. We got a money flow pattern. We can see it. Right? So we're watching these things, man. We're watching these things. Oh, do I have a heckler? Hmm. Wow. That was the first. That's a good heckler, too, man. I bet I know who that is. That's unfortunate, man. Are the four stages long biased? My man said, is it long biased? I don't usually take questions in church, sir, but for you, the Lord has moved me to do that. Let's say you're short biased for whatever reason. Money flow is what you want it to be, sir. If I was in the shorting game, I think I'd be looking at stage 4 declines, which is the opposite of the breakout. I love that person. You guys missed it. If you're on Instagram, you missed it. I had a good heckler. They said all I teach is the basics. All right. The basics. So let me give you the basics, sir. The universe is bipolar. Love, hate, war, peace, high tide, low tide. That's the philosophical view of nature. Prices go too high, prices go too low. They're always looking for the middle. You're always looking for the balance in life. You're always trying to be just right there, save just enough. Come in right on time, get that raise when you're supposed to, have 2.2 kids, get to go on vacation, keep it all in balance, man. That's the goal in life. But that's the goal of the stock market too, man. It swings in balance. And like your life, it goes too far sometimes to the up and the down. Always seeking that balance. And that balance is the equilibrium line. Balance is true value, man. And that's what we're looking for. That's what Gilead found. True value. Now, that concept of true value may not have anything to do with being a day trader, but it has everything to do with the big picture. What is that, pillar number 8? I haven't talked about the 10 pillars of success in a minute. I know. It's all basic shit I'm teaching, so keep up. Be fast. This whole book is basic, 140 pages of just basic shit, according to that heckler. So imagine if you didn't even know this. I guess they're saying you really, I don't know. It's all basics, man. So in my little basic world, I thought Gilead was worth about $85, and we hit it, right? So based on time and your continuum, what if this was overvalued 70%? My man who is it long bias? No, sir. Now what are you looking for? You're looking for your short signal. What would be your short signal? Well, you want to see a stage 3. Means the high is high, right? We got our stages. We just aren't long bias. We're short bias. So what am I looking for a setup for? The opposite of a breakout. The opposite of a buy. I need to see the breakdown because I'm a short seller. Now, in my experience, short selling works best if the market is going down because the wind is the overall is the wind. So inside our Discord group, we have a channel for shorts. You don't see me doing much in there just because I'm always buying stage 1s. I'm not against the guy making money on the short. I'm just usually accumulating stage 1s because I have, with unwavering fucking certainty, I know where the market is going up. It's been doing that my entire adult life. Gives fucks what anybody else says. Stocks go up. Pepsi, MO, McDonald's. Now, does every single stock? Nope. I've been with AT&T for a minute and been in the red for a while. That doesn't mean at the end it won't be higher. Okay? And you could bounce out of that and roll into other things, whatever. Same in real estate. If you bought a house 2 months ago, I bet it's under this. Like I tell people all the time, don't do 3.5% if you can help it. I'm not saying if you can't help it, but if you can, because boom, when you buy, if prices come down, you only got 3% down. Let's say we get a 10, 15. I've seen a 50% correction in housing, well, at least once in my life. I've owned rentals for 20 years. Do the math. They've been repriced a couple times. I didn't move in and out. I just weathered myself for what is. So when I see the stage 4 decline, I know what's up. For me, It means get my money ready for some shit I need to buy because I know where it's going over my lifetime is up, irregardless of what my heckler said or irregardless of what uh, 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 oh man from Rich Dad Poor Dad thinks. Market's going up, man. It always has. And if you don't believe me, it's called history. It's not secret. Go look, pull up the chart. Now, you may say, well, because of this and that. Well, I don't know what the fuck to tell you. It goes back to like 200 years. Before that, they were trading bonds in Europe, and we've been buying shares and stocks for almost 500 years now. The bond market's like 500 years old. The real estate game, landlords collecting rent, this shit's not new. They were doing this before you got here. They're going to do this after you're gone, and me too. I'm just trying to insert myself into the game. If you want to play it shorter, this is a sell signal. Stage 4 markdown. You're looking for a breakdown under the 200 or the 20. So let's look at plug. What are we looking for? The opposite of a breakout. It's when the moving averages cross each other. Moving average convergence, divergence. This is all basics though. Welcome to Money Flow Basics. They said all G teaches is basics. All right. They're kind of right. I'm going to be honest. It's how the Illuminati works. Basics. I had a guy tell me that once. Well, yeah, all you did was buy a house, and then you just kept buying houses. It's like, yeah, that's how I did it. Pretty basic, huh? Nothing complicated. And they were like, you should write a book on that. I'm like, it'd be a pretty short book, man. Meaning I just did the same thing like fucking 20 times. I don't know. I'm sorry. Like, it wasn't complicated. Like, I just went and found shitty, undervalued houses, and I bought them. I mean, I don't have it. You got me. That was my secret. You're right. There was no double flux, back capacitor, algorithmic NFT thing. None of that. I just simply took money and invested it in Pepsi and waited. And whenever it would come down and look like it bottomed, I'd buy some. And if I bought some of this one, cool. And over time, as I did that, I lowered my price point and I collected dividends and my fucking wealth expanded. It's not complicated. And then I paid off my house and now I got less bills. I don't have car payments, no credit card bills, no student loans, no house payment. And if I make $10,000, $20,000 that month and I don't owe a mortgage, I don't owe car payments, credit cards, guess what? I can put $5,000 into a closed-end fund. And the very next month, 30 days later, they give me money. And they keep doing it. And what if we then go forward and then 6 months later, I'm like, fuck, throw another 3 in there. Now we're at what? We're not at 8. It's been giving me money. Now we're at like 12. And what if we just keep doing this? And soon it's like 40 and they're giving you 400. And I post them every day on my Instagram. 260 from ET, 80 from this one. I got one the other day from Starbucks. I haven't posted it yet. $64. If every day you wake up, people give you money that you don't need and you invest the money, it's hard. It's not complicated. You begin to get wealthy. So I do teach a lot of basics. So I'm going to accept that criticism that I teach the basics because I actually do. I am guilty. It's just the same thing over and over. My new book is basically the same book, just explained different. But that's kind of what adventure movies are, and that's kind of what series on TV are. It's pretty much the same shit, just a different person told a different way, and that's called fucking entertainment, I guess, in a way. But we all know how to lose weight. We all know how to work out at the gym, right? But we connect and we get something different out of different people. Back to basics, help you become a gate trader. Yep. Man, look at this here. See what's happening in plug? So after you've seen the money flow this morning, a lot of times I assume people understand what a moving average is, what an RSI, what the MACD is. So as you learn the money flow, how we put all these together, the trigger points that we're looking for, the apex and the anchor point, once we figure that out, and every day I'm looking at it, it goes fast, and it is so basic. So basic. So basic, you should just heckle me about it. They'll be like, why are you teaching the basics, Gerald? Teach the Illuminati secrets. we're about to get a breakout here. So looks good, man. On page 15 of the Money Flow, and I'll wrap up with this, there are hundreds of financial newsletters that will overwhelm you with stock picks. Each will tell you how great their picks have performed. What you don't see advertised are all the trade predictions that lost money. Because of our need as human beings to find what we want outside of ourselves, we fall victim to people who don't have our best interests at heart. I believe this book can set you free from fear-based marketing and give you control over your own money. Now, that said, there are many good financial newsletters available that can help you narrow down your search and give you plenty of good ideas on what to buy and sell. I subscribe to several financial newsletters that I find very valuable. I've often talked about them, Barron's, Morningstar, a couple others that my friends run. I don't take all their picks. It's in my world. A lot of times one person's pick is I'm doing it the same, but I'm playing a different angle. Maybe they're playing Macy's and I'm playing Kohl's, but we're both playing the same idea. Does that make sense? And maybe my friend's buying Chevron and I'm going to do the trade with Exxon, but we're in the trade together, man. You get it? That's what's up, man. And so what I'm trying to use other people for isn't so much a all in or an all out or a right or a wrong. It's like, how can this person help me stay in flow, man? I want to be in flow. So I want to be around people and things in the market that keep me in flow of the market, because life will pull me out of flow. You know, wife's saying this, husband saying this, kids want this, and I can be pulled out, but real quick. I know a lot of people make fun of Jim Cramer, but man, if you didn't watch the market today, if you go listen to him for 5 or 10 minutes, in 5 minutes you'll be like, okay, that's what's up. Intel did what? You're over there checking the chart, and now you're in flow that quick. And once you understand indicators and stages and sector rotations and time, right? And how the Federal Reserve works and what a difference between an ETF and an ETN, right? All these things, this shit goes fast, and then they're like, it's the basics. Like, yeah, no shit, it's always been the basics, man. Going to heaven is the basics. Getting into heaven is the basics, man. What's up? All right, man. Appreciate you guys listening. Hey, if you don't have my book, get my book. If you're not following me on YouTube, man, what's up with that? Thought we were friends. I've got some of both books. I got this new printing. I really like the way it flips and fits in a backpack. It's a lot thinner. Doesn't have the spiral off to the side. I like it, man. If you don't have it, you might grab it. I appreciate the support. Hope you enjoy these classes. I go live 2 to 3, 4 times a week on YouTube during the week and do more trader focused. I've been trying to limit that to one stock so I can make it make more sense. To me, it's flurry of nonsense when we're just ripping through stocks. But the ultimate goal is to drive home this to you, and that you begin to create this. And I think that'll make you a great trader. If you become a great trader, it means my friends are great traders, and I want a lot of great trading friends so I can make money. I think other people do too. And this is what I'm looking at last Sunday. I got to make up mine for this Sunday, but I got to go do some work on a property. So, but do yours tonight too. This is very similar. Sometimes I do it on a whiteboard. Normally I do it on a notebook, but if I'm in some places, in my office, I do it on a whiteboard. In New Orleans, I do it in whiteboard. But if I'm on the go, I use notebook paper. And this is probably more practical than most people. And what it is, to your left side, find all your stage 3s, man. All these. You ain't got to be perfect on that. The RSI's got to be extreme. Price looks or appears to be putting in a stage 3. Go look at oil right now. It looks like this. Those positions, where the hell did it go? There. Those positions become money for you. If it's a dividend stock, I want to put it back into a dividend stock. If it's a growth stock, I want to put it back into a growth stock as a general rule, like 90% of the time. The reason being is I want to roll my dividends from a lower yielding thing to a higher yielding thing. So if you remember a while back, I sold some ConocoPhillips to take a position in KSS, Kohl's. Since then, Kohl's is up 14%. I've stopped adding. That was a good move. I trimmed. I got into it, a couple grand into it at a 7% yield, and now I'm up 14%. Take your winnings, you put it into a stock, the stock goes up 14%, and they pay you a drip for the rest of your life. I don't think you can execute much better than that. The only thing that would make that better in life is that the numbers just were bigger. And that's where I'm trying to get it, bigger. So if you saw, I started with Gilead, it was 3,000 in that one video I emailed out the other day. Now today it's like 12,000. You have $117,000 deals, you got $1 million fucking dollars, by the way. I don't know if you know that. 117 stocks, you got 10 grand in each, you got a couple dollars. But they all start with small. My first deal ever was AT&T. I still own it today. Okay? Still a shitty stock. I ain't giving up on it. I'm going to stay with you. Me and AT&T are married. I don't even give a fuck about the return. Just give me that dividend, and I'll eventually get that price point low enough. This stock is going to pay me. You can do that when you control your own money. Meaning I'm not responsible to I don't have to report this. I'm not a hedge fund. You know, those guys got to move shit around. I don't have to do that, man. Sometimes people will be like, well, you know, I'm down. I'm down right now in Lyft, man. I'm going to be all right in Lyft. I believe that, right? It's not all, it's a speculative position. Take it a little lower. It's going to go higher. I'm going to accumulate some more shares. Same in Tesla and Spotify and PayPal, right? And then if I go look now, Cisco's fair value. It's basically fair value. It's hit its thing. So is Gilead. So we have things to do with our money that we put in play years ago. So when someone will say, what would you invest in today? What I did yesterday, bro. What I did yesterday. It ain't different because you showed up. It's the number one thing. So I would just tell them, come look over here. You'll see what I'm doing. Right? And then you'll see. And then I log it here and do better. Fuck. That person on YouTube said I get a lot of hecklers lately, if you haven't noticed. Man, doing this shit free. Who heckles a free show? Who heckles a free show, guys? What is that about? How do you heckle a free show? Added to Tesla, Amazon, JO, and in my buy and hold, that's the money game. That's the buy in income, as Chris says, buy income. HBI and Zim. Now, Zim is a little out there on the risk spectrum I've been talking about. I've been trying to get people to go read up on it, understand what this is. This could be a big money maker or it could be a shit show. Go read on it. I'm taking a risk with some money on this. I think it's going to pay off. And this has been just a disaster, but we keep playing it. We keep playing it. That makes sense? Appreciate you guys, man.